Starting December 26th, the Social Security Administration is initiating its largest annual mailing. We're talking about 75 million documents heading to mailboxes across the country and the world. In this extended session, we're going to cover four major pillars: the document breakdown, SSA 1099 versus SSA 1042S, and why misplacing it is a legal nightmare; the stimulus strategy, how this form is your golden ticket to the proposed $2,000 tariff-funded dividend; the Social Security Fairness Act, why 3.2 million of you might see taxable back pay on this form for the first time; the 2025 benefit overhaul, COLA updates, the new $2,000 Medicare Part D cap, and the higher earnings limits. Deep dive. What exactly is the SSA 1099? Starting December 26th, look for a Social Security benefit statement. For U.S. residents, SSA 1099, this is your tax bloodline. It summarizes your gross benefits in Box 3 and your net benefits in Box 5. For non-citizens or expats, if you are a non-citizen living in the U.S. or a beneficiary living abroad, this form is used to report your benefits to the IRS and potentially handle treaty-based tax exemptions. Why you cannot ignore this even if you have zero income. Many of you haven't filed a tax return in years. You might think, I'm under the $25,000 threshold, why do I care? Here is why. The IRS gets a digital copy the same day you do. If their system flags a discrepancy, for example, if you forgot a small pension or a part-time job, they will use the data on this 1099 to calculate a tax bill for you, often without the deductions you deserve. The $2,000 stimulus connection. The president and economic advisor Kevin Hassett have been vocal about a proposed $2,000 dividend or rebate funded by tariff revenue. How the SSA 1099 ties in. Income verification. Treasury Secretary Bess Sent mentioned that these checks would likely target households making less than $100,000. For Social Security recipients, your SSA 1099 is the only official federal document that proves your eligibility. The simple return requirement. If Congress passes this as a refundable tax credit, you might be required to file a simple return even if you owe $0 in taxes. To do that, you need the exact numbers from Box 5 of your SSA 1099. Direct deposit alignment. The bank account linked to your Social Security is usually where stimulus checks are sent. If the information on your SSA 1099 doesn't match your current filing status, your check could be delayed or sent to the wrong address. The Social Security Fairness Act and back pay warning. 2025 is a historic year because of the Social Security Fairness Act, which finally addressed the WEP and GPO. The tax trap. About 3.2 million public workers, teachers, firefighters, and police received retroactive back pay in early 2025. The problem? If you received $20,000 in back pay this year, that entire amount will show up on your 2025 SSA 1099. The result? This could push you into a higher tax bracket or make your Social Security benefits taxable for the first time. You must check Box 3 of your statement to see how much of that lump sum is being reported to the IRS. The 2025 Good News Overhaul. Beyond the tax forms, 2025 brings massive structural changes. The 2.5% COLA, while smaller than previous years, it adds roughly $48 a month to the average check. The Medicare Part D revolution. For the first time ever, there's a $2,000 hard cap on out-of-pocket prescription drug costs. No more donut hole. If you have high medication costs, this is a massive win. Retirement earnings test. If you are under full retirement age and still working, you can now earn up to $23,400 before the SSA starts withholding $1 for every $2 earned. This is a significant jump from 2024. Your 2026 battle plan. Access early. Don't wait for the mailman. Log into your My Social Security account at ssa.gov on or after January 1st to download a digital copy. Audit the form. Check Box 6 for federal income tax withheld.
If you owe money every year, you may want to file Form W-4V to start withholding taxes from your checks now so you aren't hit with a bill in 2027. The safety folder. Put this 1099 in the same folder as your 2025 Medicare Plan Annual Notice of Change, ANOC. You'll need both if you apply for any state-level energy or property tax assistance. Knowledge is your best defense against financial surprises. The document arriving after December 26th is more than just a tax form. It's your proof of income, your stimulus eligibility, and your record of the Fairness Act benefits you've earned.
The answer depends on the type of benefits you receive and any changes in your situation during the year. Let's break it down. Number 1. Social Security Retirement Beneficiaries. If you're already receiving retirement benefits, you are very likely to get a notice. Even if your payments haven't changed, SSA sends letters to confirm records, explain upcoming adjustments, or provide other year-end updates. Number 2. Supplemental Social Security Income, SSI, recipients. SSI recipients may get letters about income verification, changes in living arrangements, or requests for updated information to ensure continued eligibility. Number 3. Social Security Disability Insurance, SSDI beneficiaries. Those on SSDI could receive notices regarding work activity, income verification, or upcoming continuing disability reviews, or CDRs, which are routine checks to confirm ongoing eligibility. Number 4. Dual beneficiaries. Some people receive both Social Security and SSI. If that's you, you might get multiple letters or one consolidated notice covering both programs. And people with recent changes. Any change in income, work status, address, or living situation can trigger a notice. Even if everything seems the same, SSA may still send letters confirming your information or explaining adjustments that affect your benefits. The key takeaway here is that if you receive any form of Social Security benefit, you need to check your mail carefully around December 26th. These notices are not optional reading. They contain important information about your benefits and, in some cases, require a timely response. Once you know who is getting these letters, the next question is, what exactly is in them? Not all SSA notices are the same. They come in different types, and knowing which type you have is crucial. Let's break it down into categories. Number 1. Benefit amount updates. These letters let you know if your Social Security, SSI, or SSDI payment is changing. Common reasons include cost of living adjustments, COLA, corrections due to changes in your income, or updates from previous underpayments or overpayments. Even small changes can affect your monthly budgeting, so it's important to check the amount listed. Tax documents. SSA sends forms like the SSA 1099 for Social Security income or SSA 1042S for non-resident beneficiaries. These are official tax documents that you'll need for filing your taxes. Missing or ignoring these can cause confusion during tax season, so make sure to keep them safe. Eligibility or information reviews. These notices ask you to verify or update your personal information. Common triggers include changes in income, work status, address, or living arrangements. For SSDI recipients, it could also involve a Continuing Disability Review, CDR. Overpayment or underpayment notices. If SSA believes you were overpaid or underpaid, you'll get a letter explaining the adjustment. Overpayment notices usually include repayment instructions and your options, like requesting a waiver or setting up a payment plan. Underpayment notices explain the additional amount that will be added to future benefits. Action required notices. These are the most critical. They clearly state that you must respond or submit documents by a specific deadline. Ignoring these can delay or reduce benefits. One of the most important reasons people get SSA notices in December is changes to their benefit amounts. Whether you're on Social Security Retirement, SSI, or SSDI, understanding these changes can prevent surprises in January when your payments arrive. Number 1. Cost of Living Adjustment, COLA. COLA is an annual adjustment made by the SSA to ensure that your benefits keep up with inflation. It's based on the Consumer Price Index for Urban Wage Earners, CPIW, which measures how much prices for everyday goods and services have increased. Even a small COLA can slightly increase your monthly payment, which helps maintain your purchasing power as costs rise. Other adjustments.
Aside from COLA, benefits may change due to income or work-related adjustments. If you worked part-time, had a pension, or earned other income, your SSA payment may be recalculated to reflect that. Past underpayments or overpayments can also affect your next check, which is why SSA includes that information in the December notices.